Successful Minds with Patricia Baronowski-Schneider, the show that takes you around the world to share interviews with some of the most successful and relevant people on the planet. Hear their stories and get the most important business lessons they have learned on their road to success and get exclusive advice on how to implement their success into your life and business. Successful Minds with Patricia Baronowski-Schneider is brought to you by the Strategic Advisor Board and your host, Patricia Baronowski-Schneider.
Hello and welcome back to Successful Minds. I'm your host, Patty Baronowski-Schneider. Today I'm joined by Bill Danzell of Dutch American Capital. Our topic today focuses on offering financial solutions and strategic advice to the public markets. So thank you for joining us, Bill.
Thank you for having me, Patty.
Sure. So tell us a little bit about yourself.
I've been in the financial service industry since 1981. I came into with Merrill Lynch. Did 15 years with Merrill Lynch and Prudential Securities. Opened up my own shop as an IRA, and they really focused in on special event investing. My clients were primarily Middle Eastern, but we were investing into the US on ideas that I thought were great, which never were. And so I had a mandate that each investment would work. So yeah, that led to proxy contests and all sorts of things that you do as an investor to try to get the management team to do the right things. Right. So I employed all those tricks for about 10 years, and then I was working on a roll-up of money managers. It was not a blind pool. Mm-hmm. And that pool, as I pulled it together, it was a roll-up IPO, and 9/11 occurred, knocked me sideways. I did try to go private equity, mm-hmm. But I actually went to JP Morgan for this, and they ended up moving sideways for 6 months, and I couldn't hold it together any longer. So I went and acquired a NASDAQ firm, a technology firm that did pattern recognition technology. The founder won the Nobel Prize in Physics. It all came out of Brown University. And I took him to the NASDAQ global markets, changed their business model around, and then exited. And done a couple of startups, worked for a private equity firm for about 7 or 8 years, and right now building out a diabetes center, a comprehensive care diabetes center in rural hospitals. And that project that got disrupted by 9/11, that's back up on the table.
Oh, nice.
I have a tendency of getting stubborn.
That's a good thing, obviously.
And things that should have worked didn't work, and then I go back to it. And so I've gone back to this with a very talented group, and so this is my do-over.
Maybe it's just the perfect timing.
Well, we'll see.
Nice.
Hopefully there's no 9/11 in our futures.
No, keep fingers, toes, and everything crossed. Now, what inspired you to enter the investment advisory industry?
It was, I remember sitting in the Merrill Lynch training class and being asked that question. And I was 26 years old, and I had a baby on the way. And I said, really, honestly, I just want to support my family. Right. That's it. And the backstory to that, if you don't mind, I have a tennis background, and with the family on the way, the tennis had to go bye-bye. Right. And I remember my dad saying to me, he said, "Son, if you ever need money, find something to sell. Mm. And if you do it well, you'll make more money than the CEO of that company." Wow. And so I wrote 3 things down. I was sitting at the kitchen table, and I wrote 3 things down. I first wrote down real estate. I lived down in Hilton Head, South Carolina, a very active real estate market. And I go, it'll probably take me a year before I sell my first property, and everyone's going to starve. So that's not going to work. I wrote down insurance and really not knowing anything about insurance.
Right.
By the time I got to the end, my eyes were totally glazed over. And then I wrote down stocks and bonds. I go, huh, I know nothing about that. It's got to be better than the other two. And so I went into the Merrill Lynch, local Merrill Lynch office and asked to be employed. And they really didn't want to hire a 26-year-old from a small town up in New England with the family and friends without means. In a small town, southern town, where you only get money if if your family name is correct.
Right.
Okay, so there's none of that, and I say that as I'm watching the Murdoch things, and all those people are people that I know. And so your name does become known after a bit of time. But anyway, that's why I came into the business. I just simply wanted to support my family.
Right. It's funny because I'm in the same boat where I've been doing this for 35 years and people always ask me, did you have like Aspire when you were in high school? And I was like, honestly, it was a job out of high school. I was a single mom of 2 kids. It was a job I had. I worked my way up the corporate ladder, put myself through college, and it just clicked. But it was just, sometimes it's just, it just happens,
It is, and not to bore you or the people that are listening. When my third attempt at doing my accounting class, I had a professor that put 3 annual reports on the table and said, "Okay, tell me which one to invest into."
Right.
That kind of lit up my world. That was as boring as my life is, that I found that incredibly exciting.
Right.
And then I did a study on money supply, a different project, and I tied the President Nixon's election to Arthur Burns manipulating the money supply in 71, 72, which later led to the wage price controls because they had stimulated the money supply into the mid-teens, which historically had never been done. And so Dr. Albert Cox, who was President Nixon's economic advisor, I put him on the board of one of my companies that I took control of. And I said, Bert, when I was in college, I wrote this paper about Arthur Burns manipulating money supply for the benefit of Nixon's reelection. And I said, did I have it right? And he said, absolutely. That's exactly what we did.
Well, you obviously were onto something.
All right. So anyway, sorry for boring you with that.
No, it's all good. Now, tell us, what challenges have you faced during your career in the investment advisory industry?
Perhaps everyone already knows this. You can't have a successful career without if you're in the retail brokerage businesses, which is where I started, unless you have a clear pathway for raising $100 million or more. And if you can't do that, and it can't be from friends and family, that's your problem and that's your challenge. Right. So how do you do that? I was fortunate at the time that interest rates were high. I had a sports background, and I went to the sports agents and said, hey, I really sucked at what I did professionally on the court. But, you can turn over, since I couldn't play well, maybe I can manage well. So, give me your clients' monies. And it took about 1.5 years, but I ended up with 100 professional athletes.
Wow.
And that gave me my path and some credibility into the industry. Nice. That all went away about 8-9 years down the road. And I went up I went up to see my CEO up in New York, the big wirehouse. And he said, well, Bill, what are you going to do?
All right.
Geez, George, I have no freaking idea. but let me try this out. I said, I think I can raise money internationally. He goes, oh, really? And he goes, well, where do you want to go? I said, well, let me try the Middle East.
Right.
We have no coverage there. Let me take over the Middle East. He said, that's interesting. And he said two things to me. He said, first, if I let you do this, you have to make a promise that you'll be successful. And I said,
that's a pretty big, pretty big promise.
I got this one. Don't worry. He said, I'm going to be embarrassed running cover for you if I give you this, and say if you're not successful, it doesn't look good on me. I said, you don't have to worry about that. And then he said, when are you moving? What part of the Middle East are you moving? I said, no. My family's in Hilton. We'll stay. I'll commute.
Right.
He goes, He said, well, every expense that you have in being successful in the Middle East is your expense. The company will not pay one penny of it.
Wow.
And I said, great. I shook hands, and it was during the period where I always maintain interns. Mm-hmm. And so I had a Kuwaiti intern, and I said, your job is to set up meetings. I'll take you back to Kuwait. That was a summer internship.
Okay.
And so he put me on the phone. This was the first week of his internship. He put me on the phone with the Kuwait Investment Authority. So this is pretty good. And I had an idea relating to a contingent value right with Mary and Merrill Dow. And so I put it past them, and they said, well, we have an interest in this, but one is we only invest at a minimum of $300 million. Can you handle that? I was hoping it was 5, but sure.
Exactly.
We can do the 300 for you.
Wow.
And the second is, everybody in the summer disappears, and we won't be back to September to really evaluate this. Will the investment still be around? I said, sure. Of course it will be. Not knowing. And so I called up my CEO, and I said, George, you wouldn't believe this, but the Kuwait Investment Authority actually likes my idea. And the industry has changed so much. Anytime somebody has an independent idea, we can talk about this later, all the red flags come up. So I said, George, would you fly out, help me with the presentation? I said, sure, we'll do that. So,
but his expense will be covered. Right?
So the week before our meeting, Iraq invaded Kuwait. And so now I have Rami Suleiman and the rest of my interns in an apartment that's on a lease that's coming to an end. I said, well, Rami, your parents are under house arrest. You take the 3rd floor bedroom. They can stay with me as long as you want. Right. But I said, who do you know in Saudi Arabia? And he said, well, my godfather is the chairman of Aramco. I said, let's get him on the phone. So he set me up with 50 appointments with the 50 wealthiest families in the kingdom. And during Desert Shield, I went out there for the month of November, cold calling on, which was great because no one else was doing that because Iraq was on the Saudi border shooting missiles over. Wow. And so, to go back,
boring.
What started in the beginning of our conversation was that one of the families said, "Yeah, we like the idea," and it was the same stupid idea, which was the Mary and Merrill Dow contingent value, right? And he said, "We like it. We'll try it, but if it doesn't work, never ever ask us to invest in another one of your ideas."
So much pressure.
I said, sure. Just give me your money. Of course it's going to work. So it did.
Okay, good.
It did, and it worked for the next 10 years.
Wow. Okay.
And then that's when I went off to do the roll up. Each deal took years or shortened my lifespan by years.
I'm sure it did.
They were all public companies. They were all investments that had great ideas. There was an event that I saw that would trigger revaluation. The revaluation never came about the way it should have come about, which led to being an activist shareholder, which CNBC, Fox, and at the time it was CNN, FN, all loved hearing about these stories of failed investments that I had to work on to make it work.
Ooh, you definitely have the pressure on your shoulders.
Yes, that's why I wanted to do something different.
Yeah, I can't say I blame you. Now, how has the investment advisory industry changed over the years?
Yeah, for the worst, they have really decided upon that diversification is best suited for the conservative safety of principal type clients. So when you read that, you go, okay, if I invest in things I don't know,
Right.
my money is safer. You go, really? How does that work? So, okay.
Like flipping a coin.
Yeah. So last year is a perfect example of why investing into things that you don't know doesn't work. Now, it doesn't work like that. From Benjamin Graham to Warren Buffett to everybody, safety and principle really comes from, and well, it was really two things: wealth preservation and creation of wealth. But they both really have the same common denominator: is you eliminate risk by knowledge. Mm-hmm. In knowing the situation, looking at all sides, understanding all risks. Am I comfortable with the risk? Am I not? Okay, so that ranges from, I'll go buy a 2-year treasury, and you go, that's where my risk is. Okay, but you understand the United States government's going to make good on this in 2 years. You know this. Okay, you don't put money into a bond fund where you take a maturity date and you go, I'm going to have a diversified portfolio of bonds that have no maturity dates.
Right.
Who in their right mind thinks that works over a full market cycle? Well, the people that think that works is the compliance department, all the lawyers that don't understand finance.
Right.
And they're the ones that are governing the finance industry, because what they look at is, when we get sued, when we get pulled before arbitration, how can I defend it? Well, if I'm defending diversification for conservative investment, it works on a defense. Okay, is it good for investment? No, it's terrible. It's a terrible idea. But legally, they win. And that's how the industry has changed.
Right. It's funny. I mean, it has nothing to do with the investing cycle, but I know what you mean from like a marketing standpoint. I work a lot in the financials. And just to give an example, Reg FD, Regulation Federal Disclosure. This was set decades ago, and it was dead set against social media. But nowadays, the world is on social media. So when you have companies like everybody, iWatch, iPad, everybody's, checking their investments online. So when you try to promote these companies, these financial companies online, again, I'm not just giving my opinion. I'm repurposing information that's already public knowledge, a press release, right, media, whatever. But the lawyers for the companies only know Reg FD, and they say, no, you can't touch it. It got so bad that I actually tried the beginning of a year. I reached out to everybody under the sun from the SEC saying, can we do a 20-minute podcast where we talk about what they can and can't do, because that'll make them feel a little better about doing this. Nobody would touch it. I said, they don't understand social media. The lawyers for these companies just follow whatever the SEC says. I said, so you're just stuck in this bubble that you want to reach this audience that's online, but you can't go online to reach them. It's like, there has to be an answer to this. So I get what you're saying about everybody following what they don't understand what they're working with. They only know like whatever's in the book, so I get it.
So lawyers don't understand financial markets.
Right.
I dare say that only a few of them actually understand business, and the fact that they are ruling the roost on the financial industry is not to the investment public's best interest.
For sure. I agree 100%. Now, what creative financial solutions have you implemented for public and private sectors?
Yeah, for the work I did with a private equity firm, I was securitizing unloved receivables of state and local governments. So that was interesting work in a sense that because you had to really pull it together as what is it worth? What's the value? How do you liquidate? Where are you going to end up? What's the return? So it was a very interesting exercise, and in the space where I was, it didn't work. On the role that I'm doing right now, it's also unique in the industry. Essentially, when you have all these investment advisors really rolled out of the big wirehouses, and now they're age 70 with clients that have 5 years left to live, who are 85, 90 type thing. And that describes the majority of that industry. So you do have new generations, but that's, as I said, that's the group that I'm looking at. So because I've owned my own IRA, and because these are essentially peers of mine for the past 40 years, I kind of know where they're coming from. And there's about 20 or so consolidators in the market, and every one of them is tone deaf to the one that is handling the high net worth individual. Most of the roles, if you think about like United Asset Managers and Affiliate Money Managers Group that came out of Goldman Sachs, they were all focused in on the institutional market, which meant that their customer contracts were as good as last quarter's performance, and then after that kind of disappeared. So here I just built a model around addressing my peers, one from an investor perspective of how to keep it safe, reasonably safe, and yet generating an above average or above market rate of return. From the investment advisor perspective, it gave them a chance of freedom, not changing their back office platform, and gave them the time to transition out of the business in a way that they would like to transit, because every one of them will say, I'm not interested in the money, I'm only interested in my client's welfare. That is a real statement, because when you're working with the same families for 20, 30 years, they feel like your family. And many of them are have made that transformation to, oh, they're the clients that pay my bills, to, oh my God, these are the clients that, that really feel like my, perhaps, better than my own family members.
Nice. Nice.
Yeah. So that has not been addressed in the industry and with the consolidators. So as I said, I created a novel solution to allow that to happen.
Right. Very nice, though. Now, how does the process of public company listings, reverse merger negotiations, capital raises, and distressed debt acquisition work? It's a lot
Well,
out there.
each, I have found myself in, the later stage of my career, being employed by companies that want to grow,
Mhm.
that they want to expand, don't know how to do it, and they all have this dream of, I want to be a public company. Yeah. So it's pretty easy to be a public company. You just need about $500,000 to go buy a shell. And then you need another 500 to $1 million to burn that has nothing to do with your business, but it has everything to do with the professional fees that you pay. And then you have to hire an investor relations person because there is no sponsorship for your stock. And you go, oh my God, this is my full-time job trying, and the question becomes, why are you public?
Right.
Why? What is the purpose of being public outside of ego? And in a good, dinner conversation, I'm CEO of a public company. Yeah, and a very expensive dinner conversation piece. And usually it does not end as what the person had hoped. It really, as you expand, and Patty, this, it's really simple. It's how you only take the amount of capital that you need,
Right.
and the time frame that you are in, because if it works, your valuations will grow. So if you're past the family and friends stock, I mean, really, unfortunately, you have to take a look at debt because your dilution factor is so high, which further increases the principal's risk. But it's about the risk and reward, and then as you start moving into seed capital, venture capital, private equity, and maybe going public, you address those issues as your valuation goes up, and you can prove out, I have 3 years of income and stability and success, and so everybody should be interested in me. So that, you have to take each situation, but I think you try to minimize dilution, you try to minimize headaches, and you eliminate ego during the process, because this is not about you. It's really about your stakeholders growing their wealth.
Which is awesome that you see that and you advocate for that. It should be that way. Your shareholders are what make you a company. The more your shareholders are satisfied and making money, the more they're going to buy, the more they're going to invest, the better it is for you. And so it's great that you advocate for that. Now, what tips would you give to these looking to break into the investment advisory industry?
Yeah, it kind of goes back to my earlier statement. You have to have in your head how you're going to raise $100 million that's not friends and family to invest into, unfortunately, products of whoever's hiring you. Right. And as I said, I have a hard time with that because of the products are investing into things that you know nothing about. Right. And you're telling your clients, well, I really don't have the intelligence to really recommend anything to you, but except that these people are smarter than me. So please put your money into these products that are governed by people that are smarter than me. That's a very tough statement to say. Right. And that's what the industry is looking for you to say, and that's your challenge. And you're as I said, yeah. And it doesn't have to be anything fantastic. It could be right now buying the 1 year, the 2 year treasuries. Do you have a pathway to go out and interest people to buy the 1 or 2 year treasuries? You build up a portfolio of over $100 million of treasuries. Sooner or later, there is going to be a diversification need or want, and even though you're not making a living off of that $100 million in treasuries, you now have the clients to make the a living off of. So that's my advice.
Nice. Now, what do you believe are the most important skills needed to succeed in the investment advisory industry?
Well, you know, I have to steal this from my days at the big wirehouse. They would always do surveys, and you know, it was always associated for justifying the big advertising campaigns that they would do, and they were always frustrated by this result from the surveys that they would conduct with the clients. And they go, "Why are you doing business with Merrill Lynch? Why?" You know, and they want to hear, oh, you know, the research, they're big, they're respected, da 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 da. It was never that. That was never the answer. Never. It was, I like my advisor.
Nice. And they didn't like that?
No, because the power went to the advisor, not to the corporation. That's why there are so many registered investment advisory firms today, because all those clients like the advisor, and they didn't really care about whether it was Fidelity, Merrill Lynch, Schwab, or whatever. They were in it because they believed in that person.
That's good, though. I mean, it's unfortunately in short supply these days, but it is good that people can have that connection, because like I said, if they trust you and they value you and know that you value them, they're going to stick around for a long time, and you never know someone's situation. You know?
Well, now we're going to artificial intelligence and chat box, where the investment advisor is in a buggy whip business, because artificial intelligence and the attorneys, clearly the attorneys will lead the charge on that, because everything that will be said, you know, will have been pre-approved by compliance in their responses. So, you know, the attorneys will get to say exactly what they want for the clients to hear.
Crazy. Now, what advice would you give to those looking to pursue a career in public finance?
Public finance is hard. I ran the technology company. We sold to state and local governments. For the private equity firm, I was securitizing government receivables. The government contracting and doing business with state and local governments usually involves an RFP process. Which is a request for proposals and requests for information, RFIs, and those are people make decisions that may not be in the best interest of that particular locality. And I say this for someone who has spent a lot of time in these processes. Some of it very good, some of it not so good, but there is a corruption in our governments, and you know, they have all the laws and things like that, but it's corruption once removed is the pattern of decisions that are being made, and as I said, I don't need to go into examples and probably will create a legal mess for my
don't do that.
for doing so. But the public finance, it has very long lead times. It is very relationship oriented, which is a very nice way of saying it. And I would encourage somebody to go a different path.
Okay. Good advice, though. Now, what's been the biggest successes of your career in the investment advisory industry?
Well, I don't know. I think probably my biggest was my first year in business. My grandfather called me up and said, you know, what should I buy? And said, we're you know, a family with very limited means, and so I said, you know, buy 1,000 shares of ExxonMobil, and that was like 1981.
Wow.
It supported him and my mom, who's 91, and got them through their retirement years incredibly well.
Good job.
I said I'm family oriented, and that had a huge impact for my family.
Right.
I think from an emotional high, some of the stuff I did with a proxy contest to take control of a New York Stock Exchange conglomerate, with management going in already controlled 25% of the vote of the shareholders. And as you know, 50% of the shareholders vote, it's a big frickin' deal.
Right.
And my slate won the day.
Wow.
That was such an adrenaline high.
I bet.
It was just incredible. And there was a few other instances, not to bore you, but similar type experiences where you kind of risked it all, and you thought, well, this isn't going to work, and then it did. So there was a guardian angel at one point on my shoulder.
Well, the fact that you took a chance and moved to Quator, I mean, and guaranteeing success, yeah, you're definitely a risk taker, and it's paid off, obviously. That's great.
Thank you.
Now, what advice would you give to those looking to navigate the complexities of security issuance?
Well, I think the answer is really simple. You need a good securities attorney. It is a highly regulated, nuanced field, and anybody that is not in the business of rendering advice in this area should stay the heck out of it, because the penalties are so severe and large. Unless you're well guided, your risks exceed your rewards.
Yeah, and like you say, it's definitely a cost worth incurring, because it's if you don't have it, it could be a lot worse.
Yeah.
Now, anything else you want to add about what you do and how people can help, or how you can help people?
Well, I think, as I look back over my career, I have two things in background. I'm not a I don't keep momentum. I can't say it right. Things from my past, but I have a couple of things, three things in my background that you can see. First one are those tennis rackets. I have a tennis background, and when I came to Hilton Head, the former #1 player in the world was looking for somebody to hit with. And because I wasn't good as a competitive player, I was good enough to be beaten up on by somebody that was the player of the century, which was Rod Laver. So wow. He gave me a couple of his rackets, and it's really interesting because they're old Dunlop Max Pies, and he shaved him down. He was under sponsorship with Kemmel, so he got Kemmel stickers on these Dunlop Max Pies. The Camel,
the right place at the right time. Yeah.
that client in Saudi Arabia, that camel came from an art shop that he bought for me in France, outside of Monte Carlo, and that was their corporate logo, camels.
Okay.
The Elisa family. So he was the one saying, I'll take a chance on you, but make sure the investment works, or never ask again.
Wow.
And then the one behind me is just a chalkboard that you can't see, but I have 7 kids.
Okay, wow.
and my second oldest daughter, who is living on a farm outside of Charleston. Okay. And when the grid goes down and nuclear bombs are raining in on New York City, I'm heading to her farm. It's and she lived in a trailer, in a camper, for almost 2 years while she and her husband cut down timber, dragged the timber to the local lumber mill, and hand built their house.
Wow, really?
Really,
it's quite the accomplishment. Oh.
Really, and so she drew on that chalkboard and said, to the man who taught us how to live life as an adventure.
Oh, that is so sweet. But you definitely did. That's awesome. Wow.
Yeah.
That is quite an accomplishment, and something that they'll always look back on. We did this. Yeah.
Nice. Yeah, so that was very cool. So that's it. That's it. So, well, thank you for your time.
No, thank you. I'm going to put your LinkedIn info on the back, but if there's you want to tell people how they could get a hold of you.
That's great. No, just contact me on LinkedIn.
Okay, and I'll post that on here.
Yeah, okay, just message me and just say you bored me to death, but
no.
Have a business opportunity to discuss it.
No, it's all good. Well, thanks again for being on the show. Again, that was Bill Danzell of Dutch American Capital. So thanks for listening to Successful Minds with Patty B. Never miss an episode by subscribing to the show here. So thank you, everyone.
Thank you, Patty.
Thank you for listening to Successful Minds with your host, Patricia Baronowski-Schneider. Please leave your feedback and visit strategicadvisorboard.com to get the latest and greatest business advisement on the planet. Follow us on social media for updates, and we'll see you on the next episode.